Hi everyone, just want to take a look at some scalping action from this morning's trading on the DAX. The DAX is one of my favourite markets. The reason that it's one of my favourite markets is because it moves in strong trends and it moves quickly. Also, broker fees are low, so it presents a good opportunity for a superb trader's equation. So this is the pre-market action on the DAX from overnight and from this morning. You can see that what we've got on the chart is we've got black and white candlestick bars showing the price action. We've got yesterday's close here, the orange line, yesterday's high being the green line. And you can also see that we've got pivot points already automatically drawn on the charts, and we've got two EMAs, the red one being 20 EMA and the blue one being the 8 EMA. So this is what's presented to us prior to the 8 o'clock open on the market. You can see that I'm going to be looking at two particular levels really. We're going to be looking here being the day's high, and we're going to be looking probably at the pivot level as being the low of the range that the market's been in the overnight trading. You can see that the close yesterday we were down here, and that equates to the pivot point level of today. So I'm going to be looking initially at what happens to the market in between this higher level and this lower level, representing the trading range that the market is currently in. Overnight, not a lot happened in the market, but yesterday the market rose up. So obviously, first of all, looking to see whether the market wants to confirm its upward momentum. So let's have a look and see what happened during the morning session. You can see that the market rose up and then fell down again, falling to almost the yesterday's high level, which is why we have it drawn on the chart. So the 8 o'clock bar was this bar here, indicating upward momentum. We're going to, first of all, we were looking to see what happened at the yesterday's high and at the range high here. Okay, so this is also coincides with the 12,150 round number level here, so an important level. Now, 80% of the time I would say the market will stay within this type of range in early trading. Didn't today, it broke out higher, and that was the first trading opportunity of the day really. And so what actually happened? Well, the market came up in the first 5 or 10 minutes. This is the 5-minute chart, by the way. And we had an inside bar. So these congestion areas, these pause areas are what I'm looking for to examine price action within these particular areas here and these areas here, and just see what happens to prices in these areas. And if I get the right signal, then I'm looking to take the trade as long as my trader's equation is right. Okay, and as long as it makes sense. So the market rose up. It rose up to where you would expect to pause, previous highs here, so it paused here. We had an inside bar. This one here is the 810 bar candlestick, and it was an inside bar. It was inside this particular bar here. So that's a pause for a start. It's a bullish pause, and the reason it's a bullish pause is because it's got this bar here has got a great big long tail on it. Okay, so the market rose up, a small double top here, two candlesticks, and then it fell down. And again, this is an inside bar. So this bar here, the 815 bar, is inside the 810 bar here. The high and the low are inside the high and the low of the previous candle. Okay, and then we had a breakout. Now this potentially could have been a trading opportunity when it breaks the highs of this candle here. So this bar rises up, takes out the high of this inside bar. That's a potential trading opportunity, and as you can see, it would have worked out nicely. However, I didn't take it because this candlestick bar here is too big. It's too big in terms of risk. So if I'm going to take a trade from that particular bar, my stop's going to be down here somewhere. And that distance there is my risk. And it's too big. It's too big for me. I'm normally looking for 10, 11 points on this particular market for a scalp, and I'm looking for my risk to be lower than the potential reward that I'm going to be getting on the trade. So that distance is too big, and therefore I avoided the trade. The reason for that is because we've got to expect some sort of reaction at this level here. This is the high of the range, the high of the day, and it also coincides with the 12,150 round number level. So you're going to get some sort of reaction here. As it happened, the market did go up for better than 1-to-1 trade, so it would have worked out, but we can't be knowing that, and therefore in this sort of situation we have to give it a miss. So the market came up to and past the high of the day, high of this range, so it went up, came back down. Now when the market does that and then gives a signal that it's going up again, then we're looking for a breakout. This bar here was an inside bar, so it's inside this particular candle here. And so we're looking to see what happens. This has got a black body, so it's a bearish candle. I don't really like entering trades after a bearish candle, long trades after a bearish candle. I prefer to take long trades after a bullish candle. So the next bar here broke the high of the inside bar, and it had a bullish body, a white body in this case. So if the market goes above this particular candle here, there's your entry signal. In this particular occasion, your stop, protective stop, is going to be below the low of the inside bar candle, and so your entry is going to be here. So you're looking for 1-to-1, 2-to-1 risk reward, and we got that. So as the market rose up, we enter and we took a long trade, and the market rose up to here. So you're looking at a profit there of 16 points and a risk of about something like 12-13 points. It looks like the market actually nearly took me out here, but it didn't, because the market closed here on this particular candle and then it fell. So it fell down to this particular level here. So at this stage I'm not in a trade. It then rose up and it rose up and it took out the high of my entry bar here. So actually the trade was in the positive as soon as I entered the trade, and it rose up and took me out on my target here, which was just over 1-to-1. Okay, so then we get another inside bar here. We get another inside bar. This time it's too far away from the EMA for me. I didn't take that particular trade. It's also resting on the R1 resistance level, and it's got a black body, so it's a bearish candle. So when the price took out the top of that bar, it wasn't a signal for me. Price then rose up, came back down, and you can see that we've got consolidation here and another pause at the resistance level of R1, and where the market previously paused. So again, we're going to be looking to place the stop down here. We're going to be looking to enter the trade as the market takes out the top of the inside bar. So in this case, this is the inside bar here, because it's high and low is inside the high and the low of this bar here, the previous bar. So we enter a long trade here and take the market up. See, the risk on this particular occasion was really low, and the market reached target easily, and even for swing traders would have got them 3, 4, 5-to-1. So excellent trading opportunity. These pauses that we get in the market, the market pauses, and it could go either way during these particular pauses, but you can see that when the market's in an uptrend, you've got to have a good reason to assume that the market's going to turn around when it reaches these EMAs. And what I mean by turn around is you've got to have a good reason to think that the market's going to go down, because all the traders that are looking to take trades in a long position that missed out on this particular move, they're waiting for an entry, and they tend to wait for pullbacks. They wait for a pullback and they get a pullback, and then they enter long to join the trend. This is what happens, and it happens time and again, and it happens in every market. You've got bulls sitting on the sidelines who've missed out on this trade, and they're waiting for an opportunity to get in. So they got in here, they got in here, and they got in here. This is a nice pullback. You've got a diagonal pullback. The pullback's pretty much one directional. 3 bear bars here, and you can see that the market paused. This was the signal to the bulls. You've got a bullish inside bar here, and the bulls joined in by taking long trades here. You've also got the bears, the counter trend traders. They entered their short trades here, probably below this bar here, and betting that the market's going to go down to the 8 or the 20 EMA area, and as soon as the market started to give a signal that it was going up again, all of these traders who took trades here, they're going to exit. They took short trades, and they realised as soon as this bar takes out the high of the inside bar that they're wrong, and if they're in the positive at that point in time, then great, otherwise they cut their losses and they exit. And when you've got bulls who are joining the trend and going long, and bears who are realising that they're wrong and exiting, then you've got double pressure, and that's exactly what we're looking for, and it means that the market shoots up. It almost popped up this distance here, and then it gradually made its way up. You can see that this bar here signals the end of bearish resistance. The market's going higher, and it went up to and paused again at R2, the level of R2. Now, if ever you're wondering what to look for when the market's pausing and you're thinking it might reverse, then you've got it up here. It's unmistakable. You've got 1, 2, 3, 4, 5, 6, 7, 8, 9 pins. These are pins all sticking out of the top of the R2 level, and they all indicate rejection. They indicate rejection. They indicate that bulls have pushed prices up and then given up, and the bears have pushed prices down. And the resistance is getting stronger and stronger as time goes on. Finally, you get a nice pin bar here, 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 and the break of any of these lows would be a good short trade, potential short trade. Didn't take them myself because such a strong trend up. You wonder what will happen when the market pulls back to the 20 EMA. Are you going to get another trend resumption, or is the market going down? Well, the chances are with this number of pins that if the market did go back up here, then it would be rejected and it would go back down again. You've also got the 12,200 round number level here, so more security, if you like, more reason to assume that it could be a good turning point for the market. So I'm just waiting at this point in time, waiting, and the market finally decided it was going down here. No particular signal on the 5-minute chart for me. Sometimes when the market's moving as strongly as this, I'm looking for reasons to enter. Like I said here, you've got the bulls who wait for the pullback and then enter and go long. I was doing the same here. I was thinking, well, I've missed out on this, and rather than just enter into a trade short anywhere in here, which would have been successful, I'm looking for particular signals. I wasn't getting them really on my 5-minute chart, but I could see that the market was pausing here. So sometimes when this happens, I'll zoom down to the 1-minute time frame, and this is what I did on this particular occasion. You can see that this is where we were at. This was the slight pause that you could see there. We had an inside bar here. Let me just zoom in on this for you. We had an inside bar here, which was a bullish bar, and then a bearish bar. You can see that the market's rejecting. At this stage, the market's too far away from the EMA to go short. didn't get any signals anyway to go short, and the market made its way back to the EMA. You then got this bar here. This bar here. This is a doji bar, and it's right on the EMA. And as soon as the market breaks the low of this particular bar here, we're looking to go short. We're looking to go short. We're looking for a trend resumption. You can't get a clearer signal than that. You've also got a fake out. What I mean by that is you've got an inside bar. Well, you've got an inside bar here. The market's then broken the high of the inside bar, which is a bullish signal. Although the reaction was muted by the bulls, weren't really convinced. Neither was I. After this sort of move down, you're looking for a trend continuation rather than a reversal. This isn't strong enough for a reversal, but some people thought it were, and they pushed prices back up to the EMA. And then you get a pause bar that looks like that, a doji bar, and you've got to be waiting for the market to break that low and then go short. Your stop for this particular trade's up here, above the high of the doji bar, and you're trading down. And the market came down to about this level here, took a few seconds to 10 or 15 seconds on this bar to come down here. This is again the 1 minute chart now, and then the rest of this move down on this big bar, bear bar here, took about 2 or 3 seconds. So I had my risk being this level, this amount here, and before I knew it, I'd got a 2-to-1 reward to my risk, and I exited the trade. So one of the quickest trades of the week, 2 or 3 seconds, and we made target. And you can see what that translated to on the 5 minute chart that we were looking at. Basically you're entering a short here. You can't see the inside bars on this particular chart, but you're taking the short trade here, and it went all the way down and almost made it to yesterday's high before bouncing at the top of this range here and going up. Okay, so again, you've got some good price action within these bars here. So an inside bar here, a break to the low. So this is a fake out here, low. The market then turned around and started going up. And you could take any of these particular signals here. As soon as these bars are broken to the high, then the market's going up. And actually in this case, you'd have a reasonable, I didn't take this trade, but you'd have a reasonable trade assuming the market is going to make it back up to the 20 EMA and to R1, which is what it did, and it's pausing now at the level of R1. So that's this morning's trading. Hopefully you found that useful. We're trading using these pauses in the market. We're assuming trend resumption. Guys, you only need 1 or 2 of these trades a day to make a living out of trading, and a really good living out of trading. You need to have a system that you're comfortable with, a system that works. That's the sort of thing that we provide on our trading training course. So join us at excellenceassured.com for more of this type of chart analysis, more of these type of trades. And if you're learning to trade, then there's no better place to start than in our trading training course. I look forward to joining you inside the course or on the next video. Thanks for joining me. My name's Anthony Beardsell, and I'll see you soon.